Hello, everyone. Welcome back to the RationalInvestor.com's Broiler Chicken Show. Bark, 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 bark. No, I can't get up that high. I'm sorry. I told you I pulled one off like a week or two ago, and I go, damn, we got to record that and use that as our lead in. I mean, God, we got a mountain of jobs we're trying to all accomplish all at exactly the same moment here at TRI. So it is on the to-do list, but I suppose eventually one day we'll get around to it. But anyway, we'll give you a there you go. There's your official start. Somebody over on YouTube goes, hey, hey. I think they're trying to get somebody's attention. Anyway. Looks like there's a few people saying hello over there on YouTube. So hello, everybody. Actually, there's a Alexandru says Paka hell. All right. Anyway, hello, everybody. Gonna be a bit of a challenging period. I mean, we can go through the typical crypto winter. You know who is just kicking it? And I gotta say, big shout out to him. I'm so happy. And the only way I find these people is just interacting with all of you guys on a regular basis. And the latest two co-show hosts that I have for this Wednesday crypto show that we do, geez, they're so good. Paul, just killer trader. We're doing really, really well. Super proud of him. And Ben, I think Ben has a real knack for sort of seeing the big picture. And I have to say, I thought this study was it's so eloquent, right? Whenever I pull up my charts, I always look like spaghetti, gobbledygook. But Ben's chart here, just so eloquent. It's so perfect. So, based on the fact that you look out into the social media world, and of course, well, I mean, the irony of it all is, I suppose, if you are crypto oriented, crypto has now become part of the main world. I got to tell you, this, for whatever it's worth, this, the more and more I listen to it, and the more and more I hear about it, this Sam Bankman-Fried guy, this guy's an absolute train wreck. And he was basically trying, if I understand it correctly, and I'm sure it's going to come out over the next few years, but he was basically trying to Wall Streetize crypto. And if anything, I have to give a big shout out to the crypto verse. I think it's the crypto verse that killed him. But the irony of it all is that this is all happening exactly when it's supposed to happen. I mean, that's the kick in the pants about all this. So this guy comes along, of course, in the last cycle when everybody's like, oh man, we're all going, straight up, everybody's going to get stinking rich. And from what I understand, he put together a platform and the whole thing just out of nowhere, and then all of a sudden became just ridiculously wealthy because he cheated. He was like, he created a currency out of thin air, this FTT token or whatever the fuck it is. And then he used his platform to leverage its value higher and higher and higher. So in reality, the whole thing was just a big Ponzi. It's a bit of a shame. One thing I absolutely love about TRI is we don't have a token. We don't have any of that kind of stuff inside TRI. So we never get wrapped up into that nonsense. But what I love about TRI is we'll just sit there and we're just watching the fireworks. I will say it's a little disheartening to hear the public the way they got absolutely hoodwinked by this guy. And really, a huge portion of the crypto universe. But one thing I absolutely love about TRI, if you follow the TRI rules, they work. This is the number one reason why I built. Keep in mind, I've been through a number of these cycles, folks. I mean, half of the reason why I build the rules for trading, number one rule, work with some sort of algorithm, if then else, right? You guys understand that logic. If this happens, then that happens, and that happens, then I do this. Else, don't do anything, or whatever, something along those lines. And of course, you'd like to have your your if then else vetted, and you've run it a few times and go, yeah, okay. If all of these criteria happen, generally speaking, my desired outcome happens. But number two rule, and what's fascinating is I remember even in the education program that the students are taking right now. And actually, what week are you guys on? You might be on. Are the level oneers on risk management right now? I mean, how appropriate, eh? That almost seems funny, but I think actually that was a week or two ago. I sure hope you guys respected that module. Holy crap. But, my second rule of investing is don't ever risk more than 5% of your stake on any one single idea. And literally every single one of these brand new platforms, DeFi, this, whatever, BlockFi, whatever the fuck you want to call it, every single one of these goddamn things is blown up. And you know who's getting hurt the most is the people that buy the hook, line, and sinker and lock in because they want their 1,100 million% APY, but you got to lock your tokens in. What a scam. Fuck, I can't believe how, just yet again, another 4 years of economic activity. You guys working your asses off, saving your money, saving your money, saving your money. Does somebody have a toilet sound? Maybe I'll go and, I can't take the microphone into the background. But now is when you want to hear that flush sound bite. I swear, I always wanted to do that, is have like a sound board of just a whole bunch of, like a machine gun and a toilet flushing. And because like literally you all got fucking scammed. And I'm not going to get sucked into that bullshit. It's just not going to happen. What's funny with like Luna, for example, is I bought a whack of Luna at like $5-6, sold a whack of it at like 32, sold another whack at 64, or I think it was around 60, somewhere in there. That's the way that I play the game. So I didn't get hurt by Luna, but my business partner, he went full in and flush. No, this time it's different. No, it isn't. It's the same old shit, same pile, just different. Well, same shit, different pile. So, yeah, I think he stole the idea from me. And actually, I don't like his soundboard. Like his machine gun, man, he could do such a better job on a machine gun soundbite than the one that he uses. I think probably they went through a whole bunch, and the sensors went, no, you can't use that as a machine gun. That sounds too nasty. And so he has like a little, almost like what do you used to call those guns when you were a kid? I remember they were really popular. You weren't allowed to have a BB gun, right? So I think his machine gun on his soundboard is like a BB gun machine gun. Although I saw recently, Tommy Gun. Tommy Gun's got a good soundbite. It works. But anyway, I have been watching those videos. I think it's called Airsoft. Man, those guys are wicked, and they get completely tricked out in their camouflage gear and stuff. Man, they're evil. Anyway, so the reason why you see this image on the screen is, I hate to say it, folks, we are in the part of the cycle where we're going to go through a lot of pain. And actually, it was interesting. I wanted to try and mention it earlier, but I don't think I got around to it. But this morning, and I got to tell you, man, if there was a sales pitch, I know, Josh, you're watching this. If there was a sales pitch for TRI, this is exactly why TRI was created. And the irony of it all is I actually created TRI in the aftermath of Mount Gox. So basically, we're in exactly the same environment. And we used to meet, and half of the reason why I started TRI is because I used to go over to I used to trade crude oil Monday to Friday for a firm called Top Step. And on the weekends, I used to come over to this Trading View site and sit and chat with the kids about trading Bitcoin. And there was so much demand, and Trading View, if you use it, I don't know, that's up to you. But Trading View has a sort of a public chat forum, and you can see there they are chatting away. And what I found fascinating about this is that, ironically enough, this is the whole problem with centralization, is that if you say something controversial, of course, the Trading View mods come out and they all shit on you and all that kind of stuff. And this is where I learned, let's backward up in time, right? This could literally be exact same scenario. I mean, absolutely identical right here. So identical, absolutely identical. And the irony of it all, it's even the same time wise. And, we made the reference, you can see this circle, right? This was the famous Mike Hearn rage quit. Oh, I hate you all, you fucking assholes. I quit. I'm selling everything. And he threw his Bitcoins up on the order book. And it was interesting to watch chung, 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 chung. I think he had about 30 or 40,000 Bitcoins. The market just slowly chewed through them. And then that was the end of the bear. And you see the market turn back up after that. Unfortunately, you'd also notice too, date-wise, that's January. Right now, here we are, November. And I've actually talked to a lot of people over the past while that I think this cycle, especially with the way that Doge and dog money, the peaks here and the peak here, it was just so ridiculously cliche the way that this played out. The timing was almost exactly the same. The only difference was this peak was actually quite a bit higher, and this peak in Bitcoin was just a little bit higher versus this huge difference. They often say that back in this time period, there was, especially following the Mount Gox disaster, there was this thing called the Willy bot that was unleashed on the world. And half the reason why the price went up as much as it did was because of the Willy bot. But anyway, that's here and there. I do think that the similarities of this cycle and this 14-15 cycle are just, they're startling how similar they are, in my opinion, for whatever it's worth. And, when I came to Trading View on the weekends, like I used to sit in a chat room over at the old prop firm and just sit and, hey, there's a bullish butterfly. Hey, there's a deep crab. Hey, there's a 50% rule. Hey, there's a momentum divergence. Hey, there's a, it goes on and on and on. The irony of it all is that now I've schooled all you people up. You understand this language. When I first came on Trading View and, doing Bitcoin and talking harmonics and moving averages and indicators and stuff, nobody understood any of this stuff in this space. And so it was a very interesting, unique period of time in the market. But the one thing, and if we were going to take, Josh, I know you and I, we got to work on these two videos. Why would you join TRI as a sales pitch, and why would you take the school program? I have to say, the number one selling feature of TRI right now, especially in this kind of environment, is you notice, and feel free to come and join the site. We have a 30-day trial. You can come and kick the tires. Nobody is freaking out. Nobody's acting all emotional. Nobody's sort of, going off the deep end. And the reason why, of course, is because we've got these silly rules of investing that you're never, ever, ever allowed to risk more than 5% of your stake on any one single investment. And the people that actually buy this idea they don't get wrapped up in this nonsense, right? And the irony, this is the true irony, is, and I wanted to show you, we were all listening to a Twitter podcast this morning by crypto people. And you gotta love them. They've got good hearts. They're trying to do the right thing, but they're horrible risk managers. And so, of course, every time we go through one of these crazy face rip cycles, I think my mouse is on that. Yeah, there it is right there. They just go all in and they just bet the farm, and they just believe blindly in whatever the story is. And that is a potion for disaster. I mean, it just really is. It's an absolute potion for disaster. And so, the conversation in the lounge this morning, and it's fascinating listening to these people. I think it was right around here. Maybe it was a little bit earlier. I mean, what I love about these guys, and Eddie, I think, has bought the punch. What's so cool about the Kool-Aid, drank the Kool-Aid, I don't know how that damn expression goes. But what's so cool is, a guy like Eddie, he sees the big picture. And actually, he goes, wow, geez, the similarities between Amazon and its correction and what's happening in the market is actually incredibly similar. What the hell was it? It was one of these. Actually, maybe I just have it on my Twitter feed. What the hell is it? Sorry, everyone. I'm kind of stalling here. This page? No, that's not going to work. I want to show you. Come on, stupid interneting. Can't make this darn thing work. That's not over there. It's not there. It's not there. There it is there. This is so frustrating. Okay. All right. Listening to these guys this morning. It's fascinating. I mean, this was a really interesting podcast, and I guess they're still going too. There's one guy that I don't mind. Well, how do you say it? I mean, I'm not going to comment on these people. They are who they are. I kind of like Simon. I think he's a half decent. He's been around the space a long time. But listening to a lot of these people, like some of them are like advocating that there be a big bailout. And really, long and short of it here is no, there shouldn't be a big bailout. Because remember, folks, this is stunningly cliche. The market's just doing what it normally does. It's just, if you came piling in up at the top of the market, well, you got caught with your pants down. It's that simple. I mean, do we really want to replicate the same bullshit that goes on in the broader market, in the broader world? With this, they get caught with their pants down, and then there's some big bailout that comes and saves the day for them. When if they had done any of their damn research, I mean, look at how cliche this is. This is ridiculous how cliche this is. And if people had just done some time, just taken some time and done some research instead of piling all in. And I remember Brian's 2 rules of investing. If you had put, 5% of your money into Celsius or Luna or now FTX and all that, well, I mean, okay, fine. 5%'s gone. See ya. Sorry, I've got something on my foot here. But you wouldn't be wiped out. It's just, business as usual. So what I find, what really bothered me the most out of listening to these kids this morning was that people were like calling for regulation and saying, this time it's different and it's too big to fail and all that kind of stuff. When really this is just, it's stunningly cliche. You know what? This is so awesome. This is so perfect. You want to see how cliche this is? This guy is nothing more than it's the same bullshit. It's just a different pile. And I don't know why people are seeing this any different. It's the same fucking shit. It's just people don't want to follow the rules. If you follow the rules, it's actually difficult to lose money in the long run in this game. And that, I think, has got to be the absolute number one selling feature of why you'd want to come and join a place like TRI, is that we don't endorse breaking the rules. It's just that simple. Don't do it. And yet, hell, there was a guy who came on the TRI broadcast through the last fucking pump cycle. And he, even right in the middle of a broadcast, said, you know what? Fuck Brian's rules. I think he called himself a lunatic. How do you think those lunatics are feeling now? Was that a good idea? So, there is a reason why I do all this. Because the rules work. The rules keep you sane. Yeah, maybe you're not going to become a millionaire tomorrow. You're not going to become a millionaire overnight. From what I understand, this stupid Sam Bankman-Friedman clown, yeah, there's somebody who's been around a while. Let's all talk low pro. Exactly. It's the same damn thing. Well said there, Lee. Give that Lee B guy a pat on the back. Well said. This guy here, he's just yet another fucking low pro. And I guess you have to ask yourself, why would he be so arrogant as to go on like these social sort of events and stuff like that in a t-shirt and a pair of cutoff fucking shorts and a pair of sneakers? I mean, how arrogant is that? Something just didn't smell right about this whole damn thing, eh? Anyway, okay, so actually, this is an interesting heads up. We should get some feedback from you guys. I don't know whether you like this or not, but here it goes. Chris and I worked diligently through Josh's help to get this Google page up and running. Of course, you know me, I'm irreverent. I swear like a sailor. So I don't even know whether I'm going to be doing us any favors or not with all this. But, something on my foot's driving me crazy. He's totally distracting me. Sorry, everyone. Okay. I gotta muscle my way through this. Ignore the pain. Brian's a basket case. We set up the monetization on the Google page. And I don't know whether this is a good thing or a bad thing. We'll give it a try, see what the hell happens here. Google here just sent me a note. Chris, did you see that? He sent me a note. Now would be a good time to insert ads. And no offense, but, God, I was, because I've got one of those Roku TV things. And I was going on the YouTube channel, and there's some people that I guess they just blitz the shit out of their channels with ads, and it's irritating as F. So you guys tell me, and I'm not quite sure how this works, but you guys tell me, is it a good idea that we put advertising and stuff into this stuff, or should we just leave it, try to minimize the monetization so it doesn't irritate the hell out of you? Just let us know. Give us some feedback there on the YouTube page. I think there's a good 50 people watching the show, so what the hell? And of course, as always, if you could hit the like button. How does it go? Subscribe if you like to. Oh, here we go. Here comes a poll. Chris, did you just do that? There's shit happening. That was you? All right. Now it says no. 67%. So hey, at least we're interacting, right? BT says I'm okay with the sponsors. You need hundreds of thousands of consistent viewers to make anything. All right. I mean, all I really want, and I mean, okay, so here's another poll, and let's see if you guys can answer this. I don't even know. I asked our local community this the other day. Mind you, it's kind of wasting time. So sorry, everybody. But why am I actually doing this? I will say that as TRI has grown, and it's one thing that I kind of don't like about this, and in a weird sort of way, this is why they call trading the one perfect business. What's the overhead if you are going to run a trading business? Zero. No overhead. How many employees do you have to make sure that you make payroll for on a monthly basis when you're trading and running your trading business? Zero. There is none. So a guy that I used to work with back in the 80s, he used to always say trading is the one perfect business. So this is where this gets kind of interesting, because I mean, you hear Chris. I mean, Chris isn't here working for free, and I think the world of Chris. So how do we make sure that Chris is paid and he's happy? So I can understand the trap, and there are others on the payroll. And TRI is getting bigger, and of course, we want to do more development, more development, more development, which means how do you pay these people? So it is an interesting period of time that TRI is going through. We're growing. And, I think I told you guys before, I was actually really shocked to hear this. But that Real Vision, you see the size that they are. And I heard that they had something like 100 employees. So as a result, that's why they had to go sort of the shill route and the advertising route, which I hate. So I'm caught between a rock and a hard place here. So I mean, you guys all know what my motivation is. And I try to do as much as I possibly can, like pro bono, free of charge. I don't know, pro bono is probably not the right word, but try and keep the cost to TRI as minimal as possible. But there's some things I just can't do. This silly chat thing that we run on the site. That's like a $15,000-$20,000 a year nut, just to make sure that they're happy, and it sucks shit. Well, we just demonetized. Whoops. Oh, well, that was fun. Anyway, so the point here is, please understand that my motivation to do all this is not to grind you for profit, but at the same time, too, TRI is growing like a weed, and you see the hyperinflation shit that we're living in this world. So one of the ways that maybe we can try and deal with this problem is if we go the YouTube monetization route, which means that we might have to include advertisement. I suppose if you're watching this video later on, I don't know. And also too, I think they have like the super chat things or something like that. Chris was telling me. So you might see those things. Would you like to donate to the TRI cause and all that kind of stuff? But just try and understand, it's not for profit. It's for, can we break even? And unfortunately, in this market state, trying to remember where we are in the crypto cycle here, this is going to be a bit lean here, folks. I'm not going to sugarcoat this. All right, so interesting, Chris. Good feedback here. Wang Jun just said, ad just came on the live show. Not a good experience. So yeah, give me some feedback. So YouTube just played an ad, and I can see that the viewership just dropped off there. We just lost about 10% of the viewership. Okay, so Chris is just peppering you with ads. So maybe while we're doing this, we just refrain from ads. It's probably not a good idea. Paul J says super chat, yes. So he does like the super chat. All right. So anyway, we're giving this a whirl. We'll try. And if you guys are just like, this sucks horse, you know what's Brian's, we'll just kill it. But we're just trying. And hopefully that helps you understand a little bit. But I will tell you, As you can see from this chart, and I thought this chart that Ben did up in our last crypto show, it's eloquent, it's clean, it's simple. Remember, Bitcoin is an algorithm. So technically, it should actually look very algorithmic over time. The sad part about it, of course, is that because this is a log scale, the humans, the silly humans, they just can't appreciate the size difference between the price here at like $1,000 and the price here at $150. They can't appreciate the difference here, $20,000 versus $3,000. My hunch is they can't appreciate the difference here, $60,000. And let's just do the math. I think we have a pattern here, folks. 1,100 down to about 150. In fact, I remember on BTCE, you guys remember that exchange? I find that fascinating. Just on a side note, right? Listening to this podcast here today, most of the people on the call, they couldn't even remember things like Mount Gox. They didn't even know what the fuck Mount Gox was, and they're like, "Oh well, you know what? We need to create a bailout fund," and all these people should. No, you don't want to do that because that's just going down the Wall Street route, and you're just turning crypto into another Wall Street product. I thought the whole point of crypto was decentralization. And if you fuck up and you make a bad financial decision, well, it's your fault. And there are no bailouts. Go screw yourself. That's a typical Wall Street. And the sad thing is this Sam Bankman-Fried guy, he's bought so many politicians that he might just get his bailout. And they're going to say, well, Sam's too big to fail in the crypto space. And ironically enough, it should be all of your responsibilities to go, no, he in fact, he is too small. He is a punk. He's just another kid in the marketplace. His ego got way too big. And of course, the one thing that really bothers me about this world is that money talks. So, all of a sudden his bank accounts go up and, his perceived equity value goes up. And then all of a sudden now he's an expert. And oh no, we better not let him get into trouble. If anything, a really good example of this is this idiot. I mean, I don't mean to be rude, but of course I probably am. But these people, this should have been your number one warning sign that the crypto bull was over. This video right here. I'll play it for you. This was the number one sign that this all was bullshit and it was all about to collapse. I don't mean to be rude, but there literally could not have that worst person ever. That's great. But I suppose he's a New York Jets fan, so I suppose he doesn't like the New England Patriots. But this was your warning sign. Well, and so that's worse. So now people are like, don't blame Tom. He's too pretty. He's won too many Super Bowls. Don't blame him. It's all her fault. She's the evil one. But anyway, the point here is that if he goes down and he takes a really bad hit from this, the only person he has to blame is himself. It's just really stupid money management to go in that hard. So, and now, of course, I won't comment on their marriage, but what do you think the odds are that maybe the divorce had something to do with that, eh? I wonder. But anyway. So there was lots of writing on the walls. There was lots of writing on the walls, folks. Number one, if you are a half decent technician, then you have to respect a study like this. Thank you, TRI, for your awesome community, for making sure all community members understood this cycle picture closely and understood exactly the rhetoric that is prevalent in the public discord around these cycle events. So the irony of all of this is, do you think for a moment Bitcoin itself gives a flying fuck about this idiot? I mean, of course, I'm going to get totally demonetized and all that crap for this. But do you think Bitcoin cares? Do you think anything to do with the Bitcoin algorithm and why Bitcoin was created and how Bitcoin functions, do you think it cares at all about this? And you have to learn this. And if you can't learn this, then really you got no business being in this space. The answer is no. Bitcoin does not care. I tried to explain this to all of you at the top of the cycle, and people literally would not listen, which is so frustrating. I tell you what I'm trying to do here. And of course, if I'm trying to tell you to stop, not buy at the top of the market, and then I come out and say, well, now actually it's time to buy in the middle of this disaster, how's that going to resonate with the public? And I can tell you from personal experience, I mean, look how many people are watching this video. Where's all the thousands of hits? Where's all the, in fact, actually, I was really happy I got to meet my buddy yesterday. So I hadn't heard from Shane in a while, but Shane and I, oh man, we've been following these charts, the cost of production charts, forever. And I tried like the Dickens as sort of some sort of good Samaritan to try and stop people from piling in up top here. I remember I had one previous student who basically right up here publicly, and of course he's got a million bazillion followers, and I think he's made tons and tons and tons of money from just basically saying buy, you'll get rich, buy. And he basically came out and said, don't listen to technical analysis. Don't if technical analysis is telling you to caution, then really go harder. And what's worse is all of the people in this broadcast here today that we've listened to here today, I actually heard these are the people that were saying things like, well, if the price of the asset doubles, don't sell half and build a risk-free trade so that you don't have to worry if the thing goes off the board. No, buy more. Go take out another mortgage on your house because it's just going to do another 100x on top of that. So, those are the people that get rich in this space. I don't quite understand what God's plan is for me. I should probably just shut the fuck up and just when the next cycle kicks in, just get on some sort of shill bandwagon and just shill the fuck out of this. And just as soon as the top comes in, just disappear. Poof, gone. That's, drives you crazy. So the irony of all of this is the rhetoric, now that we are actually back down and we can actually start thinking about value in this space. What's the public sentiment? I mean, if you listen to this morning, not these idiots, I mean, please don't listen. Since when does a professional football player know what the fuck he's doing managing money? I mean, seriously. Seriously. It's just it would be like, Brian, what the fuck are you doing on the field? Get off the field. You don't know what you're doing. You run slow as a fucking you're slower than a 90-year-old grandmother on the field. You can't tackle. Your muscle structure looks terrible. You're a wimp. Get off the fucking field. Well, I would say the same thing to these guys. The professional football players. Until you have about 3 or 4 of these cycles behind you, and you have a pretty good idea of how venture capital works, hire a professional. Don't go and make stupid decisions with your fortunes. Like, are you all in? I'm all in. Yeah, fucking A, let's go all in. I thought it was interesting that while listening to these guys, and this is the worst part about all this, is I distinctly remember, and I remember telling all of you, and you hate to do the I told you so's, but I remember distinctly telling everybody in the public that when we were up here, there was going to be scandals that will come to light that will take price down here. But we don't know what those scandals are. And this is where we get into, yes, rational analysis is all about the overlapping of technical analysis and fundamental analysis. And really, so you say, okay, well, fundamentally, that's these lines here. What's the cost of production for this commodity? Technical analysis is trade location. Don't buy up markets, buy down markets, buy against previous market structure, blah, blah, blah. So according to rational analysts, we actually should be very interested in investing in this asset right now. Isn't that ironic? So what's going, the point here is that we in the public are only privy to the known fundamentals. I thought it was interesting listening to these guys this morning. One of the guys brought up this gentleman, and it turns out that this guy's actually sort of like I said, the puppet master behind all of this. And very, very sketchy people, very sketchy. And all of this was going on as the price was being bid up, and all the suckers were being all, encouraged to go and, invest their life savings, pile in up top here. There was another, what was it? There was another sort of, I don't know whether you call it scandal or, nefarious legal activity. Oh, you know what it was? Did anybody watch that latest video about Chico Crypto? Actually, where's the best place to do it? Probably not there. I think on my YouTube page probably has my history, because I watched it last night. I thought that was fascinating. But it's also another really good example. So how can I show you this? History, maybe it'll be over here. This was really good. Where the hell is it? Problem is I fall asleep in front of my TV and these videos just play endlessly. Let's see where the hell it was. Yeah, this one here. This is fascinating. Again, I really like this guy. I think he's Tyler, I think his name is. And he's kind of like, well, I'm gonna dig into the underbelly of this space, and I'm gonna tell you some stories. And then right at the very end, he's like, well, I might see you next time, but maybe not. But he was right there, that point right there. So at like 1632, he's kind of like, well, I might see you again, but maybe not. But some fascinating sort of things that are going under the surface. And I think this has to do with the guy who was sort of like the principal operator of Tether or something like that. I don't really know the operators very well. But the point here is that you guys think that you're buying into a certain story, especially up top here. We are all going to get rich, DeFi, all that shit, whatever the latest, story du jour is. But do you actually really know what the real fundamentals are that are going on behind the scenes? Half of the reason why I like to do this rational analysis is that, just the price chart alone says that I'm not allowed to participate up here. I'm just not. I mean, if I saw the market make new highs and then back off and then make a succession higher highs and higher lows, okay, after three, if I have sort of certain setup criteria, the bot, then I can take a shot. Maybe I'll, buy this W and risk against this low, and that's sort of my total risk on the particular trade. I think when we were through here, I think, as a trader, I did consider strapping on along. Novogratz actually was sort of famous as saying, this is where the market should bottom. And then Luna happened, kaboosh. And actually, I was kind of lucky. As a trader, I'm very flexible. I can just flip over from going long to going short, and then you make money on the short side. But I would just say, just keep it simple, stupid message. if we're not at or below green boxes and you don't really know what you're doing in the marketplace, my suggestion, especially all up in here, is you just have to wait, and you have to just simply say, and you know who's really good at this is my show co-host on the weekends, or excuse me, on Wednesday. Where is the chat? That's over here. I thought I saw him. No, I guess he's over on the YouTube page. Yeah, there he is. I think I saw him. Paul? Yeah, I think that's Paul. This gentleman here. And actually, he runs his own trading community now. He's gotten so good. I think he calls him Crypto Traders Arena or something like that. Anyway, very flexible, able to go long, go short, just sort of ride with the punches. What was I saying? Anyway, wanted to give him a shout out. I thought he does some very good analysis. What the hell was it? There was some, I was going to give you a shout out about something you said recently. Hey, there you are, Paul. Now I can't remember what the hell it is. It'll come to me later on. Anyway, so, just simply put, and you look at this chart and you go, fuck, Brian, that's just way too much. No, just let's just take it nice and simple. We'll just start a brand new chart. You don't even have to use all these fancy schmancy indexes. I really like to watch Stamp, ironically enough. This is the exchange that I've been watching since I first got into the space. You can see how easy that is. And then I'm just going to take my fib tool. You can use these recent lows. Mr. Gann would suggest that we just go take it right back to zero, and considering that's $3,000, down to zero is not a huge difference. It's a difference of right there. That's basically zero. You can see, so there's the zero line right in that area. And then if I go off of that low, you can see there's not a hell of a lot of difference. The point here is we are now finally at or below reload zones. Want to make it really, really simple. I'm a big fan of the 13 EMA, 30 SMA moving average relationships on weekly charts. Try and help you see whether we're at or near a bottom. So I happen to have my sort of pre-formatted sort of setup that I like to use on TradingView. So I'll just put all this stuff away for now. And really all that is boom, boom, boom. All right, and we'll put on our moving averages. There we go. Well, actually, here, let's do this one. It's a little bit easier to see. There we go. The red is our fast moving average, and the teal is our sort of medium moving average. And as long as they're still pointing negatively like this, with the fast moving average below the slow moving average, I don't think there's a whole hell of a lot to do here. Just cool your jets. But we are at least at trade location. So I have told people I have no problem whatsoever. If you are a little old lady and you can come in and you can just keep buying against the FUD, fear, uncertainty, and doubt, I have no problem whatsoever now that we are at or below reload zones for you to just slowly acquire Bitcoins. And remember, there technically is POW. It's interesting how this latest cycle, especially with all the environmentalists being played like suckers, real push against POW and a real sort of push towards POS. I think Mr. Sam Bankman-Friedman just officially took a big shit on the POS world. Oh, so is FTT SOL? I'm not even sure which one it is that he's doing. Is it a POS? Well, that has multiple meanings these days. But I like the purity of Bitcoin. And I have to say, working in this space for 8 years, man, it's awfully tough to argue this. Proof of shit like that. But and the worst part about it is, they sit there and they bullshit their way through the proof of value. I've asked this constantly. How do you actually come up with an intrinsic value for a POS coin? And nobody has ever been able to answer that question for me. So that in itself is a major, major warning sign. I suppose the big selling feature of Bitcoin, and that's back to this chart. Don't mean to confuse the hell out of you, but hell, we can even just I mean, just for the purposes of this, I won't save it like this, but just remove drawings, poof, and we'll remove price. And this is quite literally a visual representation of what the cost is to mine Bitcoin using various different hardware. This is sort of we have one site, gentlemen. Again, this is the reason why you want to be a member of TRI. We're not going to bullshit you, right? We're just going to talk honest. And I used to be a licensed commodities broker. I don't know where Cotter is here, but one gentleman, I would scroll up. Actually, it'll be interesting to see. When was the last time he was on the site? And he's probably like, don't show my picture, you bastard. What are you doing? Anyway, you can see other members like talking to him quite a bit. A very, very honorable gentleman. You can see he's mentioned a lot on the site. There he is. He had been sort of advocating that he figured that sort of a good sort of public cost of Bitcoin would be like maybe up here. So here we are now, where I think we're down around the 16,000 area. So you can see that a lot of the public, hey, there he is, Cotter. That's it. I got to tell you, it's people like Cotter that actually make me really happy and pleased that I set this place up. Like, these are smart people in this space. They're not going to screw you over. They have no vested interest. It's just we're a bunch of traders just talking levels, talking charts. And of course, we kind of chuckle, which is a bit of a shame, but we chuckle at these disasters because what should happen? Worst case scenario, just like I said before, worst case scenario here is you lose 5% of your stake. Poof, it's gone. Turns out this guy was a fraud and the whole thing was a joke. That's the worst case scenario that should happen if you are actually a card carrying member of our community. Not, oh my God, I'm wiped out and oh geez, I'm gonna have to go get a job flipping burgers at McDonald's. Okay, I don't want to lose all that stuff that I had on this chart. So let's just make sure everything's back in place. All right, good. So if we want to keep this conversation as simple as possible, like if I wanted to go on to like some sort of major news outlet and talk TA with them, I would actually keep the conversation just to these two really simple studies. One is a trade location study. The other is a momentum study. I'm actually liking the idea. I think for the purposes of this, I think we'll just do 0 just to keep it simple. Mr. Gann, of course, would say any cycle peak, you should expect a 50% retracement of price off of the 0 line, which is a fascinating testament. So we should have expected 34. So, and you can see doink, that just smacked into it right away. But if I was going to go on to like CNBC or something like that and talk technical analysis, I think I would just really just keep it to these two simple studies. And then, we want to make it really, really simple. Is there any letter of the alphabet that we would like to see on this price chart to make us feel like, hey, maybe we actually got a chance that the trend is up here? And if you need help answering that, then you need to get your ass into TRI and just park yourself for a year. Put your money away and just listen. And if we're say, obviously, nothing's obvious, but we do all 69. we do have a public channel, and I love this channel. This channel, I think, I got to say, I'm very, very proud of this channel. I did listen to a gentleman this weekend. We're coming up to the cyber, what's, and the Black Fridays and all that stuff. And then we've got people that are on the marketing sort of angle. We're going to try and, encourage you to join the site. I would say, this testimonials video that we put together a few years ago, it is as true today as it has ever been. And the cool part about this is we've been running this place for 8 years, and yet the story is always the same. Our customers, but more importantly, our students, right? All three of these gentlemen, this gentleman, that gentleman, all of these people were students at TRI. And they all consistently say life-changing, life-changing. Like, seriously, we are in the business of completely rewiring the way you look at the world. That's our job. Now, I'm not really the biggest fan of this show, right? And if anything, with us monetizing the channel, what I would kind of like to see is maybe we do the advertisements in these little short videos and stuff. I don't know, maybe after the fact, we do the advertising. I don't really like the idea. Oh, that interesting. I screwed up the intro to that. Oh yeah, because this was we had a really weird week last week. YouTube was fighting with me. So actually I should probably take that down from there. Maybe even in some of these old video sort of tutorials that we have on the site, maybe we'll do advertising in there. But the way I like to pitch this is our free channel. There is tons. I mean, this is this weekend show, and I mean, look how many videos are in here. I don't know, does it even count? Probably more than I could possibly count. Look at them; they just go on and on and on and on and on. And you can see they're all about 2-3 hours. You could literally go back like a year or two from now, or even like 5 years, really. And just I could walk you through exactly where we were in that particular cycle. And the cool part about it is you can hit the rewind button, start from like here was back when we had a different sort of starting image for the video. And literally you can just start, okay, I'm going to start my education here, right? And just watch every single video. There are some people that watch these videos and they can actually train themselves, take lots and lots of notes, and teach themselves how to be a good trader. There's one gentleman in particular I was very proud of over the past few years. I think he's basically taught himself how to trade right from scratch to pro trader just watching the free content. The way I like to frame this is that, I mean, this gentleman I'm speaking of, incredibly smart, right? You can just talking to him, you can see how intelligent the guy is. I'm not nearly as intelligent as this guy. So the only reason why I happen to be able to, see and talk about this stuff is I've been doing this forever. So for all of those type of people, especially people that are like, hey, like I run a tattoo parlor. I'm not a trader by vocation. I'm a small business owner operator, so I understand the basics of running a profitable business. And so I love talking to those kind of people because they understand the fundamentals of business. But for those people, I really like our education program. I think I've said this to you before, and I really don't want this to be a big shill, but it's a big shill. Sorry, just the way that it is. But for those people, in fact, I've been working on videos through the weekend to try and highlight what are the pros and cons. I love this school program that we put together. It's been life-changing for these people. And if you want to, I'll put this this page. It's our very simple school summary. I'll throw it in there. Maybe I'll put it in the I'll put it in there in the YouTube chat, and What is that? Yeah, I guess that's the YouTube chat. Maybe I'll put it in the description as well. If you want the absolute best sales pitch for joining our education program is just simply to listen to what other students have said. We don't really bullshit you. We're just going to teach you how to run a small business of trading. Do you see somebody over there on YouTube? It's like, quit your fucking shill, Brian, and get on with the charts. Okay, fine. But the problem here, folks, who is this? This is Veritas. What do you think I'm going to tell you when I see an image like that? Am I going to say, right, go and load up on Bitcoins? We're all going to get rich. I mean, what do you tell somebody? I asked you all earlier, and some of you actually got it. Luke and MM got it. I mean, really, we won't be able to declare that there is a bottom into the market until we see that letter of the alphabet. And the interesting thing is you can see it over here. Can you be patient and disciplined and wait for this? Veritas, can you see that W? That's, this is what you want me to be talking about, right? What the hell is it that we need to see for us to get bullish? That right there. And what's fascinating, of course, is that through this whole move, the entire sentiment in this space was, ironically enough, very similar to what we're seeing now. It's very, very similar. Like I said, that last cycle, it was almost laughable because it was the BitConnect and sort of, right? But it's the same fucking shit. It's this guy. It's the same shit. What's scary about this cycle is this cocksucker went and bought a whole bunch of politicians. Now, this guy, the BitConnect guy, he screwed over a whole bunch of little people in this world. So as a result, it didn't really get launched into the stratosphere of, hey, we got to shit on these people. And it was sort of relegated to, Steven Seagal, right? We'll go after him. And Floyd Mayweather, right? We'll go after him. But what this cocksucker has done, and no offense, I mean, this guy, he has, if you are a crypto fan, this guy single-handedly has fucked us all. Because now, and especially with these election results, what I'm seeing here is that it doesn't look like the Republicans there was no red wave. It was like a red ripple that might actually end up backfiring on itself. It looks like the Republicans are going to take the House, but this is coming in very close. Hell, and we all know rigging elections, is there slight nefarious activity going on with all this vote counting after the fact and stuff? Oh boy, we don't want to open up that can of worms. But what I did find interesting is now this has gone back to basically that image now. I don't know whether these votes are final or not. Obviously, we're missing a few states here. So the point of the matter here is if the Democrats do actually start holding on and hold power, I got to tell you, this, not him, where the hell was it? This guy here, oh my goodness. I mean, what do you think any Democratic politician now is going to say if somebody says, oh, what do you think about crypto? Hey, didn't that crypto guy give you a whole bunch of money? And are you going to give all that money back, Mr. Politician, now that this crypto guy has blown himself up? And it turns out actually some of that money was a bit maybe potentially fraudulent. Oh, goodness. Here's the kick in the pants. And this is Mr. Veritas. You want value for this, and you guys are not going to like this message at all. According to my analysis, we're supposed to move through 17 and a half, roughly 17, 18 year cycles in the market, where the cycle oscillates between assets that are built to take advantage of growth and assets that are built to sort of protect your capital. And historically, we've used things like gold as sort of a protect me from the boogeyman kind of thing, right? If we look at the gold Dow ratio all through that last century, it was an excellent proxy on where we were in that sort of bigger picture. Is money flowing into growth assets, or is money flowing into what they call fear assets, or things like gold and silver stuff? Uh, I believe that the powers that be, I suppose we can just go like that. There, oh, fudge, so small. Anyway, I believe the powers that be, they knew that this was coming. Absolutely knew that this was coming. And unfortunately, if gold had been given the free rein to move back up to its upper end of its price channel, it probably would have bankrupted all of us. In fact, there's something like 10 times the number of paper gold assets out there than there is actual physical gold. So, how on earth does the system actually pay out those gold bets if there just isn't any gold to pay it out? Oh, I know. The price of gold has to go absolutely insane, through the roof, because it turns out there actually isn't any gold around at all. And there's all these liabilities. And it probably would have bankrupted a lot of, like, hell, I wouldn't even be surprised if it bankrupts the half of the banksters, because the banksters, of course, are the ones that underwrote all these gold ETFs and gold certificates and stuff. They don't have the gold. So how the hell are they going to pay them out if somebody says, all right, here's my gold certificate, I want my pound of gold? Oh, sorry, we don't have it. I actually make the argument that that is half of the reason why Bitcoin was invented to begin with. And what a coincidence, they invented it just at the point where the US system was about on the verge of collapse. And at the very least, they knew that the sort of fear asset cycle, which, oh, by the way, according to my analysis, actually peaked there. They needed something to replace gold so that gold prices wouldn't do this. Along comes Bitcoin. So, the people that did take advantage of Bitcoin down here, of course, they became stupidly wealthy. I've made the argument all along that this is really nothing more than George Bush Sr.'s plan, and that Bitcoin is actually nothing more than just a CIA pet project. And oh, by the way, if you don't believe me on that note, maybe go and listen to Chico Crypto and his comments about who's knocking off who in these spaces, and how this gentleman figured that the CIA and the Mossad were after him. And sure enough, he instantly died. Anyway, so I guess the point I'm trying to make here is Bitcoin did its job. But the funny thing is we're not in that cycle anymore. In fact, now we're into the following growth cycle. Klaus and all those cocksuckers, they have done their great reset. You could make the argument this is the great reset. Something had to be devalued. They had to devalue the currency, because there's no way, and we all know this isn't rocket science. I even run into people on the interneting who, whoops, so blue, who say, nah, money supply growth has nothing to do with inflation. And come on, I mean, gee whiz, all you got to do is just, listen to Mr. Milton Friedman, and he used to go on and on and on and on and on about this until finally people like Volcker finally listened to him and said, yeah, you know what, to get in front of this inflation, we got to kill the money supply growth. And that means we got to kill the economic growth. And, they took short-term interest rates to where they did. I have a feeling that Mr. Powell got suckered into this economic models. We can dramatically expand the money supply and it will not be inflationary. And unfortunately, through that previous Jupiter-Saturn cross cycle, We were in a falling interest rate environment. You can't fight these cycles, folks. And so what it ended up happening was we had to wait for the cycle to actually finish. As soon as the cycle finished, then the market just went into apeshit mode. So, if you believe in Jupiter Saturn crosses and all that and the money cycle, this was basically a 40-year money growth cycle, falling interest rates. But now you can clearly see, I remember I said earlier, what letter of the alphabet do we want to see to be bullish? We want to see W's. What letter of the alphabet do we want to see to be bearish? We want to see M. So now when it comes to interest rates, and sadly, this is the inverse of bond prices. As soon as we got through that sort of Jupiter Saturn cross event, frankly speaking, I'm shocked at how quickly interest rates have had to move up here. I didn't expect this to happen. I thought that the duration of there's basically the trough of interest rates. This is the short-term sine wave peak in interest rates. We should expect this whole cycle to sort of finish the middle of August. And this ties in nicely with the Benner cycle. It even ties in nicely with the Bitcoin cycle. But the point here is that this study here is an average of all of these interest rate increases over the past 40 years. So I thought we'd do an average, but you can see, boom, we've gone way beyond the average. Maybe are we a little overdone here in the short term? Maybe. Actually, I've heard some market pundits saying that they figure that the Fed's probably getting pretty close. They've done a lot of damage to the economic growth cycle, and it looks like some of the inflation data is actually starting to show that they're getting in front of the curve. I don't know. Only time will tell on that. From what I understand, and I have been talking to a lot of people on the site about this recently, this lady, who I think is pretty darn smart. Let's see if I can show you. I think I had it on the Twitter feed. Where is she? It was back here somewhere. Yeah, this lady here. She thinks that there is a big credit crisis that's coming down the pike. So I don't think we're quite out of the woods just yet. And of course, M's and W's. Let's keep this as simple as possible. People, don't overthink this. Do you see any W here yet? I don't see any W here yet. So, okay, I think that's about all this sort of big picture economic rhetoric I want to blab about here today. And I won't sales pitch you anymore on joining the site. I think, if you do need the sales pitch, please just go watch the videos on the YouTube page, the testimonials. I think those are people talking from the heart. And I think that the testimonials page itself, just go and read. And I can't do nearly as good a sales job for TRI, whether you just join the community and you just want to kick the tires and just listen to us, talking about different people and stuff in the marketplace and, what's happening and stuff. I think there's no better sort of truer community out there. And I'm very proud of the community that we've built here. Good job, everybody. When I, analyze the market, there's no reason to be getting overly excited. If anything, I think you probably could be excited to the downside. A couple simple technical objectives, and actually I think these are on the old charts that I published. And I published these charts a while ago. This is sort of cost of production aligned with trade location. But there's also, just talking about what the market is right now. There's also, which one do I want to show you? This one, I think. This is sort of like the psychology of the market chart. As I said to you before, quit barking, Brian, but up here, it was impossible to slow you guys down. Everybody was buying. Then, as we said, Mr. Novogratz, he kind of thought that maybe we would bottom in here. And if the market was still a bull, then we would have bottom, we would have held this, and we would have started marching our way back up. Kind of like what you saw happen here. Held the lows, march back up. The only problem is wrong part of the cycle. Very, very difficult for this to happen. And as I said to you earlier, I think that this cycle was nothing more than a repeat of this cycle. Almost identical. The only difference was that we had the Willie bot, and I don't think price was ever supposed to go that high. I wouldn't be surprised if price was supposed to stall out maybe up around the 61.8, 500 bucks that cycle. That would align more closely with what we saw happen here. So this is sort of like this phase of the chart. And if, like I said, you want to keep it really, really simple, this is why I teach these fib tools. You don't need to put a heck of a lot on your chart to see these levels. There's that Colin. In fact, I used to work with a guy in New York, Ray Burchett, and he was the one who taught me 38.2s, but we had a site member who absolutely fell in love with this concept, and he liked to call it his Collins pump chaser zone. So if you wanted to participate in the bull and you were totally gung-ho, but where? Notice that cycle pivot down into Collins pump chaser zone, nice little W, set up this final rally here. There probably was a half decent trade there. So as we were getting into this part of the cycle, again, at any given point in time, we should look for 38.2s. We pulled back. Novogratz was saying, you know what, this looks like a half decent area for a bottom or against key support, and that failed. So on this event right here, we should have all been like, oh boy, trouble central. And the interesting thing is as of this point, right, you should have taken a look at your chart and said, well, this kind of looks like A to B and C to D. Boom, 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 boom. On sites like TradingView, that's what this tool is. Right? They even make it nice and pretty. A to B. Watch what happens if I just copy this. Obviously, it's the same chart. I just plunk it right on here. Let's see what happens. Boom, there it is. A, B, C, D. So I would say that there is a very high probability that we need to trade down to that level. And what I would normally write on charts is that is your AB equals CD price objective. It's a very simple concept, and yet, man, it keeps you out of a lot of trouble. This ABCD was actually sort of the basis for a trade setup that I used to use when I was trading crude for the Wall Street fat cats that you guys all love so much. This one didn't particularly set up a trade for me, although, hindsight being 2020, all of my students should look at this chart pattern right here, that 3-bar pattern, and go, wow, look at that. And I hate to say it, but I think that was like the sell signal of sell signals right on that date there. A little bit of front running the market, probably not something that beginners would try and do. This is what's called an empire. It's a very difficult formation to trade, but you can see the end result. Baboosh. So we can make the argument that at least if you were thinking about coming in on the buy side, at least you're not walking into a trap. When we were up top here, like I said earlier, we had guys that were even TRI alumni, and that what's really pissed me off was the TRI alumni were even saying technical analysis doesn't matter. We had just insane divergences here. I mean, look at this RSI. The RSI was nowhere near making new highs. Just horrible divergence here. And yet they were just like, man, no big deal. Just keep buying, you'll get rich. And hopefully going forward in life now, you all sort of remember that. Take a screenshot of that. When that Beamish guy is screaming about divergence, at the very least, I should pay attention. There's probably something to this. Ugh. At the very least, maybe you go and buy Bitcoin, but you don't buy more than 5% of whatever money you got to risk. That's not a bad idea. Hit the like button, subscribe, ring Colleen's bell, please, with sugar on it. Chris won't blitz you with ads, I promise. Maybe one or two. Now at least, and remember, I was a full service broker. The only reason why I left that business was because my wife got terribly ill, and I basically had to relocate my whole business home to try and look after her and Liam, which didn't go very well. But anyway, what do they say? Something about best intentions. Anyway, so when I was a broker, I used to have a lot of little old lady clients where, they're like, Brian, I don't go and lose my money. You're not allowed to do that. So if they say at the same time, but Brian, I would like to have my money working, what should I be buying? If I looked at a chart and I saw that it looked like this, I might say, well, we can go and just nanny nibble, little old lady purchase, whatever you want to call it. I love Grim, our level 1 instructor. He calls it planting flowers. I mean, what a beautiful analogy of little old ladies. His trading plan around that. I don't have a problem with that. Dollar cost averaging. You're not chasing. And the kick in the pants is back at the exact same part of the cycle, actually just about 2 or 3 months from now. Right here. Pretty popular guy in the space, a guy by the name of Da Vinci and I. We did a little video together, and we were joking about how, well, if you bought these levels down in this area, and keep in mind, this was a reload zone of this area. All right down in here. If you could force yourself to come in and buy at like $3,000-$4,000, which was an absolute gift. I think I told you earlier, I was listening to a webcast by Simon Dixon this morning, or not by him, but I think he was part of their panelists. And I kind of like Simon. I think he's got a relatively good head on his shoulder. This podcast here, he was one of their panelists. I think they're still talking anyway. He's the type of guy who comes out and he would publicly say, look at it, Bitcoin corrects 80% of its previous trading range. Let's just change that to 80 so you can see that. Bitcoin's a no-brainer. I mean, it's a no-brainer. If you believe in this blue chip asset, then you got to buy that. And I mean, look at what happened following that. Like, holy shit. So, as I had sort of said earlier, if I had little old ladies on the books as clients and we were just in here, doing a little bit of nibbling every once in a while, we bought a little bit here, 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 bought a little bit here. Maybe our average price over the whole darn thing is somewhere in that area. Well, how do you think the little old lady's feeling when we eventually work our way up here? Obviously pretty good. So that's the whole point of this little old lady kind of approach. Low risk, but we're not going to bet the farm, right? You can't break that 5% rule. I tell you, one of the hallmarks of being a part of TRI is you end up sticking around a few cycles. I can tell you unequivocally, just even listening to these people today, unequivocally, I could absolutely tell you without a shadow of a doubt, there were some people on this call. There's 23,000 people that were listening. There were some, I could even hear it in their voice. They were just about to give up on crypto and they will badmouth crypto for the rest of their lives. So you could hear it in their voices. But if you follow a principle like I'm not allowed to buy until we're at or below reload zones, and I'm not allowed to risk more than 5% of my stake on any one single idea, you won't be that person. And ironically enough, you will be actually coming in on the buy side down here, not selling. Like right now, what I'm hearing out of these people, FUD, fear, uncertainty, doubts. This is all a scam. Bitcoin's going to zero. This idiot just basically destroyed me. Why did I listen to a little fucker that goes on stage with these ladies all dressed all fancy schmancy in a t-shirt and fucking track pants? What am I doing? Why did I do this? This is so dumb. And they're going to curse themselves to the rest of their lives. And yet the irony of it all is that now is when you should be coming into the markets. I mean, isn't that awful? And that's the cliche about this stupid game called investing. Is so go to the little testimonials page that I shared with all of you and watch this video, because I mean, it's not like we're reinventing the wheel here. This is exactly the same shit that happens every cycle. Now I can't even find the damn page. Oh well, I guess I got rid of it. Oh well. Anyway, over here, I had on here somewhere the little testimonials page. Actually, I wanted to keep that on here. Oh yeah, here, right. This. I mean, there's the video that we did, right here. And the funny thing is we were sitting there at the very bottom of the market, and we were contemplating at the very bottom of the market there. Go watch the fucking video. Demonetized because you said a swear word, even though I'm trying to help all you people. Go watch our funny banter about would Ethereum be able to get back to its 50% rule. And keep in mind, look at this. Ethereum's $100. There's that W that I want you guys to see. Can you see the W? When I zoom in on this chart here, right? And this is what scares me about what's happening right now, is that you kind of see how they have a floor. They brought the market down and then puke out through the bottom. And look at what we had to do. Lower highs, lower lows, lower highs, lower lows. Oh, maybe W? Nope, lower highs and lower lows. Finally, a higher low. And then look how long it took. Okay, well, maybe we're going to break one. Breakout. We finally turned the corner. So we did that little video right here. And we were contemplating what are the odds that Bitcoin would go back. In this case, it was Ethereum would go back to its 50% rule. And that was a 10x. This is 10x. Off of the lows. That's what I want you to be hunting right now. Thinking like this. So, I mean, let's use Ethereum. We'll do the same thing off Ethereum. Do you see you see what we're doing here right now? I mean, we had a cute little potential W. Now, an easy way for you to sort of see, well, is this actually Wing? Is why don't you change it to a line chart? Now the W's mysteriously disappear, but if you go back here, hopefully you can see, and if you want to use a line chart, it'll make it a lot easier for you. But hopefully you can see, well, gee whiz, that looks like a W. Right? Let's get rid of all the drawings. Right, there's that W. Down, up, test the lows, turn back up. Look at that. Google wants me to hit you with another advertisement again. Isn't that incredible? Jeez. Just got another one of those notes. Now would be a good time to insert an ad so Google can make money off of you, Brian. Jerks. So where are we on this cycle? And I'm a little worried that it looks like we're sort of right in here. Now, time-wise, November, I think we're sort of right in here. Point here is, through this, it was, did Ethereum actually talk about going out of business down here? Not that I'm aware of. What I did see, of course, in this mess was the Bitcoin, this shit. So, they always say, let's see how many of you on YouTube are actually listening to me. The more things change, the more what? How does the rest of that go? You got to learn from this, folks. I've seen this at least a dozen times in my career. This is nothing new. It's nothing new at all. And the worst part about this is at the bottom of the market, of course, these things are going to fucking blow themselves up. And this guy, I mean, fuck, he might have to go to jail. I thought it was funny. He was on a video podcast with that Crypto Cobain guy. And one of the guys that they had on the guy that was the pharmaceutical stock manipulator guy, Schreckel. And he goes, hey, prison isn't so bad. It wasn't so bad. And then all of a sudden you can see Sam, he just disconnected. And they're like, Sam, where did you go, Sam? And I think I heard that he got arrested recently. So the wheels of justice are turning. Whatever. The wheels of justice were, you could have thrown 5% at this guy. And if it worked, awesome. And if it went under, so be it. And it would be no big deal right now. But the reason why he's going to go to jail is because people broke that second rule of investing, right? The reason why he's going to go to jail, ironically enough, number one reason why he's going to go to jail is because of this guy, who went, I think this guy went like fucking ass over hat into this thing. And the football player guy. That's why he's going to go to jail. It was Do Kwon from Luna. Well, there's another one, right? Yeah, that's right. And so now these little crypto kids are like, oh boy, is that my fate? Jesus. Anyway. Okay, so back to our story here. Trying to explain the market right now is as simple as this. We're standing on a field, and there's a barn behind us, and the barn doors are flapping away. And I've used this analogy with brokerage clients from years ago. I used this analogy when I first came into the crypto space. I use this analogy today. Nothing has changed. So here we are, we're standing with the barn doors flapping behind us. And we're looking there and we see these horses. Probably Bitcoin's a better story. We see the horses running off into the fields behind us. And you're looking at me like Mr. Veritas, right? You're looking at me going, okay, tell me some sort of magic formula that this will end all the down move. It will end the pain, and we're going to start heading back up. And in our little analogy, tell me how you see those horses running away. Tell me how the fuck are we going to get those horses back in the barn? And that's literally what this conversation is now. And I have to turn to you and I have to say, well, there's not really a hell of a lot we can do about it now. It's over. Oh, that's what I wanted to make reference to with Paul there earlier was I like how Paul, we were talking about Doge there last week. Doge had a nice little pop, jumped up top here. And the very first thing Paul said was, in the broadcast was, we were up top here. I mean, you see where reload zones are. And the very first thing he said was, you can't buy that up there. You missed it. It's just the way it is. It's gone. You cannot come in on the buy side up here. You just can't do it. And fascinating, look at what the end result is. Now we're back down into reload zones. So what a surprise. And actually we have a trade setup at TRI that I did on, what the hell was it? One of these cryptocurrencies I went and did this exact setup on just recently, Matic, where if you can identify previous market structure and you can draw your reload zones, you want to throw your bid in somewhere between that market structure and the 78.6. We call that the shark setup. Another huge sales pitch of why I love this site so much and why I think it's worth the subscription is we've got all these totally awesome trade setups that are all just sitting here. These have all been time tested and they're great setups. So that's basically what that setup is right there. And there's a God, anybody who's been in crypto for a while, you should remember this. This is 2017 when the bull was just rocking and rolling. Anyway, so there's a typical market structure dip, like you can't chase that up top there. You place your order down, 78.6 in that previous market structure, and sometimes you can get absolute gifts. So that's ironically enough exactly what just happened on Doge there. So really good analogy. You cannot chase. You got to work your bids down here. Now, does this turn? Ironically enough, statistically, I'd actually say the odds of this thing sort of eventually calming down here and ultimately bottoming out and starting to head back up are actually not bad. So it's probably pretty good odds. And I think I did the exact same trade on Matic. Something like that. Yeah. So this happened to be there to there, 78.6, the original market structure bottom. I had actually bought some because this was a bullish bot. I bought and then sold on this failure up top here. And I just threw my bid right back in at 78.6. And I actually, this surprised me because I'm a big fan of candle body highs for trade location. And I put my order to sell right at that level. And I'm actually a little surprised I didn't get my fill there. But oh well, hindsight's 2020. So still up on the position, but that's here nor there. The point is that this is a pretty good example of that shark setup where you want to try and buy against previous market structure. So that's basically what just happened on that Doge. It's the same logic, just different pile. And if you go back and watch our videos with Paul and Ben, Paul explicitly said, look, I'm not allowed to chase up here. If I'm going to buy, I have to wait for reload zones. So this shit works, people. Please learn it. And if you need help, in fact, actually, I think we have the level oneers just did FIBs. And I think Nadia, sort of our German student extraordinaire this term. I have a feeling she's going to be our new Colleen, our new, I don't know, Megan's still on the site quite a bit, so she hasn't replaced Megan yet. Anyway, Nadia, I think I saw you over there on YouTube channel. She might have left by now, though. But Nadia, maybe if you're still on the channel, just give the people a thumbs up that, yeah, actually, this is exactly what we were doing in the education program right now. Trying to learn the idea of this reload zone concept. So, all right, I see Mr. Veritas is talking up a storm. Let's see what he's saying here. Brian, BTC isn't gaining much versus the insane money printing. Watch this on TV. Fred, BTC. Well, I mean, are they still money printing? I don't know. I haven't seen too much money printing lately, but let's see. I'll do just a simple versus M2 money supply. Let's see if that works. Well, you know where you really see this is when you zoom out and you put the whole thing into context. So based on the money printing, you can see that ironically enough, even now, we're just now back to the breakout. Remember, if you look at the Bitcoin chart in particular, we just spent the past little while fighting at this level. That's what all this was fighting at this level. But if we take the money printing into account, actually the value of Bitcoin relative to the amount of money outstanding in the marketplace is actually quite a bit lower. So that's an interesting anecdote. Also, too, I get the feeling that this is now, with what this Sam Bankman dickhead has done here, is I get the feeling, remember, this was supposed to be the cycle top, that 2017, 2018. I get the feeling now this is going to act as a major, major resistance point going forward. And, if we just go back to our regular price chart, something like this. You see, here we are here. It's not a huge difference. So, oops, where are we? Yeah. So there is the adjusted. We're down flirting now. Adjusted, flirting. And actually, ironically enough, I had said all along, and I don't want to toot my own horn because I had just another big bozo in the market. But I had said all along that I really like this little window in here. And Graham, he teaches all our level oneers that that little area right there, we call that an institutional fingerprint, where they stop the market going down and turned it back up. This, I think, is actually your floor on Bitcoin price. And what's interesting too is if you do a fib off of that whole range, look how 78.6 is basically the top end of that range, and 88.6 is the institutional fingerprint from when Fed Powell did his panic, take interest rates to zero, and started this whole fucking hyperinflation bullshit. And I get the feeling that the Fed would like nothing more than to try and take back this whole experience. This has been an absolute disaster. Mr. Powell has been made to look like an absolute idiot in the face of people who are respected in the marketplace, like Stanley Druckenmiller. Stanley Druckenmiller, when this was happening, just kept saying, why are these bankers fucking us here? Why are they doing this to us? And the banksters, they actually believed the bullshit that hyperinflating the money supply was not going to create inflation. And I think Mr. Powell has been reminded of Mr. Friedman's lifelong work. So Mr. Powell now has some religion. So ironically enough, there is that floor that Mr. Griminator would suggest all the level oneers pay attention to, because this was basically the last reset before this stupidity of this. I believe that our ultimate floor is they just want to reset, right? How ironic, Klaus and his great reset. Well, that's exactly what that is right there. They are going to reset. They are going to absolutely destroy all of these fools who thought that they could come in and reinvent what money is. And this guy's going to be reminded that, hey, excuse me, the Fed's driving the bus here and don't step on our toes. Probably a better analogy of this, of course, is Mr. Do Kwon and his arrogance. Probably Mr. Novogratz is going to be reminded a little bit of who's driving the bus as well. I get the impression that he kind of got schooled a bit through all of this. It's kind of a... Oh, okay. Yeah, I've just been... Okay, so enough of that bullshit. I just wasted an hour of everybody's time. I hope you all enjoyed that. What time is it? Holy geez, already 20 to 1. I got to get out of here, don't I? Oh, well, I'm such a doofus. Thank you, Chris. Appreciate it. All right, let's head on over to questions. Maybe I can answer some questions. Who knows? 16th? Where are we here? It is the 13th of November. Oh, that was a month ago. Hopefully, there we are, 13th. Hi, Brian. What would be a good share outstanding for filtering canceling? Well, Mr. William O'Neill himself said about 20 to 30 million shares out. And it just so happens that's the same number as my VCIM model. And I don't think that's an accident. So 50 million, that's about double the amount that Mr. O'Neill would prefer to see. I wouldn't necessarily go on market cap, because CanSlim actually talks about companies that have earnings. So they may have fairly sizable market caps. Typical CanSlim stock I've found is 20 to 30 million shares out with about $20 price tag. So that works out just really simply about $500 million, I guess. Is that right? 20 million times 10 million, $10 a share would be 200 million market cap, times $20 a share would be 400 million. That's a little less than half a billion. Yeah. So I don't mind the market cap, in that 300 million. But remember, these are companies with earnings, so they can command a bit of a market cap. And just FYI, if you want to juxtapose this, I think I said in the course program, but also TA wise, lots of cup, and handle formations. So CanSlim stocks, they love the cup and handle formation. So just be aware of that. Hopefully that helps answer that question. I can't figure out for myself if there's some kind of relationship, like a ratio between market cap and the number of shares outstanding. That's interesting to look at for CanSlim. So very first, really simply put, the most important, and just don't, what you're kind of doing here, I see, is you're reinventing CanSlim. Don't reinvent CanSlim. Just don't do it. Can't. Every letter in this acronym stands for something. So C, CanSlim. C, current stock outstanding. We want to make damn sure it's about 20 to 30 million shares out. A, annual earnings greater than 25% annual increase. N, new products, no, sorry, CanSlim. C is current earnings, quarter over quarter, 25%. A, annual earnings, 25%. You want to see at least 25% increase year over year, 25% increase quarter over quarter. N stands for new product, new idea. S, supply of stock outstanding. Less than 30, 20 to 30 is perfect. I, low institutional participation. L, and this is where it gets difficult, because this should stand for market leadership. And what you want to see is you want to see the CanSlim stocks outperforming the broader market. I, slim. No, actually, there's no I. Yeah, so supply stock, leadership, I, low institutional participation, because it is the institutions buying that will take your stock to, 100x. And then M, we want a friendly marketplace. Now, this is the interesting thing. Who can tell me, do we have a friendly stock market right now? And I think this is probably the most important thing out of this whole model. Is the stock market breaking to new highs right now? Actually, a really easy way to measure this for a lot of sort of new people is in the stock market, they just simply say, use something like a 50-day moving average. So if we go SPY, and you can see, I particularly like the 30-period moving average. That's what I teach people. You can see that we did turn back up here. So you could say we're relatively okay. We did have a daily cross of the fast over the slow. I'd also say too, though, that this is where your weekly moving average relationships, in level 2, you'll learn about this. You can see bull market from here straight up, just wicked bull, one direction. And now you can see, actually, we're in a bear. I think we're going through sort of dead cat bounce, and it wouldn't surprise me if over the course of 22, 23, we actually carve out like a massive inverted head and shoulders here. So this formation should set the stage for that bull market. That should come in 2024. So I guess it'll be over here a bit further, right? Move everything over a bit like that. So I would actually argue from a CanSlim perspective, we don't have a friendly market. Now, you might say, well, Brian, sure looks to me like the whole damn market just pivoted back up to the upside there. Might be a bit early. Not a bad idea to be looking into CanSlim names. Look for those companies that have good share structure, have low institutional participation, are growing earnings year over year. And then, kind of like what I showed you, if this is a massive head and shoulders, what we should do is rally up into that high And that probably comes into the end of the year, beginning of next year. And then we should dip. And, if you listen to this lady, the dip is going to be pretty damn painful. There'll be some sectors, kind of like what you're seeing with crypto right now. The FTXs and the Sols and this doofus, they have to be washed out of the market. So all of your marginal names, maybe Novogratz goes under, who knows? But talking about stock markets, what would be a good analogy? There are car companies that are, in big trouble. What's that? There's like Carvana, I think it was called, right? These guys, they wanted to corner the car market, and they might not make it through this, right? She says that there is an absolute disaster waiting in the automobile industry for us all. Yay. So kind of like this guy here, he's going to blow himself up in like DeFi and all this kind of stuff that he does. Maybe he's not even DeFi. Maybe it's centralized exchanges, whatever. But does that mean that Bitcoin goes under? I don't think so. Well, same logic here. So could we see something like this Carvana over that next 6-8 months get absolutely destroyed? But something like the S&P 500 carves out this massive inverted head and shoulders. And, you heard me earlier say I love cup and handles. So hopefully what you see is that this probably is going to be a cup. And if we carve out a pattern that looks like this, I know one guy on the site, David, who loves his inverted head and shoulders, he would probably be all over this trade. And the breakout through the top there would be a huge trade. The really sharp traders, they're going to be hunting for their W's down in here. Point being, that I think we got to go through this before we get into that next bull cycle where things like the CanSlim stocks, VCIM stocks, all those growth names, they really start to outperform. I think right now there's still a lot of uncertainty about direction. And let's call a spade, that this might turn into an absolute train wreck. And if that's the case, then we come up here, we puke out, make new M's, right? What are we supposed to think if we ever see the market smiling at us? We make new lows, and the bear is still fully in charge. So that's why I think you got to wait for this market to actually turn up in earnest before you start thinking about new big bull cycles. And by the way, and I'm sure you've heard me say this, Mr. Benner is reminding us the market is not supposed to bottom in 2022. It does not say 2022 here. It says 2023. Oh, and if you like this, great stocking stuffer, throw it in the stocking for your dad. He'll love you for this. Shameless shill. I swear, this merch shop that we have, I said it before, but I just love it so fucking much. I'll say it again. This merch shop is so awesome. Your dad would love you if you got something like this in his stocking. Could be a mouse pad or it could be a coffee cup. I mean, this store is just, I tell you what, if I ever got anything like this in my stocking, I would kiss the people. Yeah, I mean, this shit pays for itself. Mind you, if you're young and you're buying dad this kind of stuff, you probably aren't trading it. But anyway, that's here and there. So the point of the matter here, and speaking to this question, is I think we're still just a little bit early. I like how you're thinking. And if anything, I want you to build your universe of stocks to consider. But I would say you're still probably a little bit early here. I don't see anywhere the debt is mentioned about CanSlim. It doesn't matter how much debt is involved. Honestly, I've never really connected debt with CanSlim and William O'Neill. I would just simply say the less debt you have, the better. Really, and the issue with the market right now is that it's going into transition. And we were just living in a world where people didn't really care about debt. And it really wasn't that big of a deal. Obviously, with interest rates going up the way that they are, I showed you that short-term interest rate picture, they're skyrocketing. Companies that are caught with their pants down, they might actually go bankrupt here. So on balance, I don't really like to invest in companies with a lot of debt anyway. And I might argue that if the market does get happier and we do actually start to see signs that we have turned the corner, I think debt will become less of an issue. And if we get back to growth and the market is growing and the stock market's happy, you get the M, the market leadership, you get M, market friendly state, it's in a bull. The debt issue won't be that big, but I would just simply say, and I like how Zach and I do this, we don't even look at companies that have greater than a like a 0.25 debt to equity ratio. So, and that's going to screen out a lot of stocks for your consideration. Could I invest in a company like Microsoft? Nope, too much debt. Could I invest in something like an Amazon? Nope, too much debt. Could I invest in something like, I don't know, let's see, well, Hut Mining, I think that's down in the States. Yeah, there it is. Hut, let's see, could I invest in this crypto? Oh, well, actually, that's not bad. So there's an example, but interestingly enough, no canceling numbers anywhere even close. So I personally would rather I strictly stick with stocks that have less than 0.25 debt to equity here. I really don't like to see a lot of debt. Now, because we have, this is not Can Slim, too much stock out, too much institutional ownership, terrible earnings numbers. I just am randomly picking stocks for you to just see a low debt to equity ratio. So just because the debt to equity ratio is low, that doesn't make up for the fact that these numbers look like shit. So I hope you can take that into account. I just don't like investing in companies that have a lot of debt. I would much rather invest in a company that has no debt, and then the idea goes belly up, but because they don't have any debt, they can always roll the stock back and you're still in there. So, well, thank you very much, Russell. Is that Russell? Russ UZ77. Appreciate the kind words. Hit the like button, subscribe, ring Colleen's bell. Actually, we'll say ring Nadia's bell. So Nadia's now the bell holder. And I see you over there, Nadia. Good to see you. Okay, let's keep moving on here. Thank you for the kind wishes to Liam and I. And speaking of which, I have to be on the road here in half an hour. So I talked way too much there earlier, guys. Sorry, I do that to me. I do that to you. Can you please explain performance bonds for us? This is a comment. I don't know how you would be associated with performance bonds. In the level 2 program, we introduce you to the futures industry, and the futures industry uses that term performance bond. And really, the easiest way to think about a performance bond is think about a guy who's on bail. It's the same thing. They call that a performance bond. So just because you put up the bail money to get bailed out of jail, does that negate the criminal charges? No. You're still going to have to go to court. It just means that you've put up a bunch of money and it's your good name that you are going to show up to court. If anything, our society is pretty nice in that they will actually trust you. Now, there's a lot of judges that it's a discretionary decision on their part. They look at you and go, no, we're not going to even give you the opportunity to have bail because we know you're going to skip town. So in essence, that's exactly the same thing. So in the futures industry, you can put on a margin contract. Are you actually buying the product that day? No. You're, in essence, kind of putting a deposit down. And your good faith with the commodities exchanges You're going to put that deposit down, and you're going to make sure that that deposit always remains a certain value of whatever that ending contract obligation is. So if the price of the asset, let's say you're going to buy something and you put the performance bond down and the price of the asset goes up, well, on paper you have a gain, but in reality you don't. You've just literally put a deposit down that you are going to buy this thing in the future. Now, you could always go to your exchange and say, you know what? I'm going to take my deposit back. I want to close out the legal obligation on this contract. Sell your position. That's fine. But just understand that there's no actual ownership of the futures contract or the asset itself until the actual contract expires and it's a legal obligation. You're buying a future that at some date in the future, you are going to do something. So the reason why they use performance bond is they don't want people confused that they are actually buying something when they open up a futures contract. You're not buying anything. You're just putting a deposit down. So it's the same logic. With regard to level 1, I'm going to need you to give me a little bit more context where you heard that reference. If it was with regard to the futures industry, then hopefully I've answered that question. If it wasn't, can you please expound on that question? Whoever asked that question, can you please put your name down? So then that way I can come back later on and go like, here's Skyfire. I can say, Skyfire, did I answer your question? And if I see you on the site, then I can ask you point blank whether I answered your question or not. So whoever asked this question, just let me know whether that was the answer you were looking for. And if not, we can always talk about it more tomorrow or Tuesday if you want. Skyfire asks, hi, Brian. I'm in level 3 now. Way to go, Skyfire. All right, moving through the options. All right, so learning a whole new language. I vaguely remember way back in level 1, you gave an example of Nortel CEO effectively selling his stock via options. That's correct. Instead of selling them outright as a way of avoiding capital gains tax. No, he didn't do it to avoid capital gains tax. That's not why he did it. He did it, and Skyfire, are you here? He did it because he had such a large block of stock. Keep in mind, if you pull up any, even Bitcoin for that matter, and I often tell people in the course, especially actually in the level 3 program, we'll do trading with the DOM the last like week 11 of the program. And we just put a simple question out, like if I had 1 million shares of SPY and I woke up, let's say the market opened up first thing Monday morning. It's probably not the best analogy to use SPY. Let's use, hey, you know what, that was Nortel, so it's an individual stock. So let's say, like Facebook, good example. If I had 1 million shares of Facebook and Monday morning, I said, all right, hit the bid. You see that the last price here on this Facebook stock on Friday was, where's the price quote? Here we are. It's 113.30 bid, 400 shares. 113.35 offered, 1,100 shares. So, and you see the bid is 13.30. So if I said, all right, Mr. Broker, I got 1 million shares of Facebook, hit the bid at 113.30, first thing Monday morning for 1 million shares. Kind of a fun question. Everybody should be able to answer this very easily. Am I going to get 1 million shares filled at 113.30? The answer is an unequivocal no. I'll get 400 shares filled, but if I did something like a 113.30 order for 1 million shares, well, it would show 999,500 shares left offered at 113.30 on the offer here. Huge number. And my hunch is price would collapse away from that. So the reason why he did the options trade was he went to a fairly large institutional house. It was a CIBC. It happened to be my bank. And he said, look, I want to get out of this stock. I can't hit the bid because I'll just destroy the price of the stock. And I think he had something like 9 million shares. And keep in mind, this stock at that point represented 35% of the entire Canadian stock market. So if he came out and hit like a market sell for 9 million shares of Nortel, what would that have done to the Canadian stock market? You might have seen the whole damn Canadian stock market collapse on one trade. So how am I going to get out of these 9 million shares? He went to CIBC and he said, all right. And the market at that time was $115 a share. And he negotiated with them and said, look, what's the price that you will give me where I can sell my 9 million shares and we don't have to worry. You come out ahead, I come out ahead, everybody wins. And they said to him, current market price is $115 a share, somewhere around that. We will do the deal at $90 a share. Which you go, $25 haircut from the market price? Are you kidding me? But it just goes to show how illiquid the Canadian stock market is. By the way, Canadian stock market represents about 3% of the entire world's equity market. It's a very small number. So that was what he did. And basically, CIBC wrote him a put option and said, if you exercise your put option, you, sir, have the right to sell your stock at $90 a share. We will buy it off of you at $90 a share. And he exercised it. So I hope that helps. It didn't have anything to do with capital gains. Can you shed some more light on how he did it and why? So hopefully that makes sense, what I just said there. Since he already owns the Nortel stock, I'm guessing he bought put options near at the money. Well, he, in essence, got CIBC to write him that option. In essence, yeah, he was able to buy and exercise his put. And because of the discount in price, they basically gave it to him at basically zero cost. In essence, CIBC bought the stock off of him for $90 and then just turned around and instantly sold it into the marketplace at $100+. So they made a great profit off it. And forced the seller to buy it, close at a higher price after the stock tanked. Well, this was all well before the stock tanked. And this is the irony of it all. And you guys all know this. Don't kid yourselves, right? If we look at Amazon, turns out Mr. Bezos, there is the price of Amazon way up top. Weekly chart. So there it is way up there. At June, July, August, September of 2021, you see the M. And then we scroll down. Keep in mind, look at that price, 180, 190. We scroll down and we see that, it turns out Mr. Bezos was, maybe it doesn't even have it here because it's February. All right, should be back here. Isn't that interesting? I don't even see Bezos on reference. Anyway, back up at the top, I remember distinctly Mr. And actually, look at that. You don't even see any reference here at all. I don't know how if I can get this any longer. Anyway, and that's an interesting tell. So you don't even see Mr. Bezos's sell orders because I guess this is 2021. So the end of 2021. What did we say there? Anyway, I remember distinctly, we don't need to waste a lot of time on this, but I remember distinctly he was selling, come on you, he was selling a ton of Amazon stock up here. And the irony of it all is that everybody knew about it. It was public knowledge. A lot of Wall Street people sold up top there. And yet, people were like, so what? And then, of course, you see the stock collapse and you go, oh, what a surprise. So it happens all the time. It's just people don't, it's funny. Fucking what's his face? Hey, buy my Dogecoin at 75 cents. You'll make great money. Whatever. No, that's not it. He's been selling tons and tons of his stock. And yet nobody really seems to look at this selling, 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 just tons, like all sale, 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 sale. I mean, if I was a Tesla shareholder and I saw this, I'd be like, should I get the fuck out of here? I think so. So, people see that insiders sell stock, but they just don't seem to do anything about it. All right, Raz asks number 4. In some crypto altcoins, they are going below previous lows. Yeah, that wouldn't surprise me. I expect that. If you then want to sneak in a fat finger bid, do you use the extension study to make predictions or a retracement study? Well, if it goes to new lows, you can't do retracements, eh? Of the entire price range and placing small bids at lower institutional fingerprints. That's not a bad idea. No, that's not a bad idea. But just what you got to understand about venture cap is it goes straight up and straight down. You can place stink bids, but I know lots of people in both crypto and the stock market that they place a stink bid and then they look back after the fact and go, I guess that just wasn't stinky enough. I mean, I like the idea. Remember, if we think about this from a financial planner's perspective, I like the idea. Just make damn sure you're not buying above reload zones. Don't chase. I would also say that, you want to add a nice simple rule to keep you honest. And I think that Doge is a very good example that you don't know how far down is, right? I mean, check this out, right? We went there to there. There is my reload zone. And it turns out that he had to actually go beyond 88. So he had to go all the way down here. This is probably like 90% correction of that entire move. Could you place stink bids at reload zones? Yeah, there's no reason why you could. I think that might be a bit high, but I love 78.6s. It's ironic that that's basically where the market's stopped. And I've also told you before that usually what ends up happening with venture cap is down the road, we find that we look back in hindsight and we see that actually the bottom comes in off that 78.6. Can I see something like that happen going forward? Sure, wouldn't surprise me. The problem, of course, like this guy's got a lot of history. So you can always keep looking back. And this isn't even the start of it, right? It goes back way further than that. But I can completely understand, and especially if you're working off of like other sort of smaller exchanges and stuff, and you're kind of like, well, this exchange just started and they just started trading. So I'm going to use this particular trading range. That's dangerous. So, I don't even know what any of these are. Let's go with this. Polo's been around a while. I don't even know what into the block. I don't even know what any of this stuff is. I think this is all about sort of DeFi. So I guess the point I'm trying to make here is, well, you might want to just keep pulling charts up until you actually find something with enough history that gives you some sort of base to work with, right? Like see, so here's a good example. Coinbase, I pull this up here and you go, this is new lows. How the fuck am I going to figure out where the hell to put my bid? I mean, I don't mean to be rude, but I might even just say, you know what? Maybe don't work stink bid, especially if we start breaking through these lows. Maybe you're going to work a stink bid in here. Hopefully it's Nanny Nibbles kind of idea. And if you want to do things like extension studies going forward, it can help. But there's certainly nothing written in stone. And where do you even start this extension study? Am I going to go there to there and maybe do extensions? 113s? Yeah, it sure looks to me like the bottom market bottomed off that 113 there, right? Could you do that approach? Yeah, sure. I think it would probably be better for you to just keep surfing through ideas, just looking for something that's got some history that actually can help you sort of find a bottom. See, now that's interesting. We look at Loom versus Bitcoin, and we see actually these are the ultimate lows versus BTC. There's the last W right there. Is there any sort of signs of W yet here? I don't think so. And then, of course, I personally prefer to use things like and actually, this is a good example where you're like, well, Brian, what the fuck am I supposed to do on something like this? I just don't have any data and we've broken the new lows. I think honestly, if I saw something like this, I'd probably say, you know what, why don't we just wait for signs that this thing has actually turned up? And that here might be a really good example where you just simply wait for some like weekly W's or something, because you just don't have enough data to work with. So kind of caught between a rock and a hard place here. I'm not going to say it's going to be easy. If anything, what I would say is this is a huge function of venture capital. There we go. At least we got something to work with. This is USDT on coin. What the hell is this? Connex. No idea what that is. You can see there is the W bottom. So I would say kind of like what we said with Grim, that key pivot low there is probably important. That one there, maybe you could start saying, well, is this a reload zone and is that like a shark setup? Could be. Yep. So there's 78.6 off of that entire range. So it kind of makes sense why there was this back and forth. The only problem is it looks like this was the pivot. There was your counter trend rally. You better have gotten some off because it looks like once this rally is done, we're probably going to poke to new lows again. And you might even draw something like trend lines like that, wherever this low is, maybe even a high to low trend line. And that might give you some objectives down the road. Could do things like extensions. You could go there to there and then go extension. So interesting. Now you can see 113 does line up nicely with the previous low with that trend line, and that is an extension of that range. It's totally doable. So hopefully that's a good application of how you can use extensions. I tell you though, until we get on the other side of 2023, I'm not really in a big hurry to call bottoms here. I did go in and do a little bit of nibbling recently, but that's all it was. Just nanny nibbling, not betting the farm on anything here. And actually, I got stopped out on my recent Bitcoin nibble there. So I hope that helps. Listen to my answer. And if it just wasn't good enough and you want me to throw some more time at this, let's take a look at this again tomorrow morning. That's a good question. What I would say is definitely be drawing against these lows here. I would do extension A to B, C to D kind of idea. So I would do my extension off of this starting range. And I wouldn't even be surprised if that stab down there was into a 113. All right. I got to get out of here pretty soon. So I'm just going to answer this question. And, whoever asked this question, Raz, if that was insufficient, let's take a look at this again tomorrow morning. Okay. Number 5, last one, and then I'll call it a day. Hi, Brian. Shortly before the U.S. elections, you made an intriguing call in which you said the gold price would be highly volatile and may jump quite high on election day. You showed us a buy for 1 or 2 cent options through which you may profit enormously, and it rose. Yeah, one of our fucking veterans, he bought the 165s, and he cleared like a 10x on the damn trade, cocksucker. Couldn't believe it. The trade that I showed you, it did give you the opportunity to double your money, but we never did get the explosion on the other side of the event. And if anything, the fact that the price didn't move through the election leads me to believe that the trade is still on. I don't think that trade's over, which is scary because, and how ironic, all the Peter Schiffs of the world are all going to start feeling vindicated again. But I think that trade's still going, let's see what we got here. What the hell's this? GC, what did I do there? There we go. It turns out that was actually a half decent idea, eh? Buying those call options, especially since we had like 3 solid tests of that bottom. Then that really weird looking W. The market did pop. It didn't pop as hard as I thought, but it did sure pop there. as I said, and actually we were looking at the gold ETF. I think that's what we were talking about. And unfortunately, we looked at it on this date here, so that we didn't even get the best price for the option. But that was the trade right there, boosh, and it popped up. And turns out, like I said, the guys who bought the 165s, man, that was a killer trade. The trade that I had talked about was like the 169s for like a penny or two. And they did actually trade up to 4 cents. So you could have gotten your double off. It did trade quite a few contracts at 4. But then they expired on Friday. So the trade was over. So didn't really turn out to a hell of a lot. I was kind of hoping that we'd get a rally up into here. Now, the fact that we did kind of like orderly move our way up here is a bit scary because I got a funny feeling the market has turned here. I suppose we can talk more about where I think the gold market's going to go, but let's just see if I can answer your question. And you said that as an options broker, you used to offer these risky opportunities ever since. Yeah, I mean, it's a punt. My question, please, what technical and I believe especially fundamental events do you look at when making such special calls? Thank you, and for having funded TRI. Oh, well, you're welcome. I think the most important thing that jumped out at me was the fact that the volatility had come right out of the price of the futures. So if we look at something like, I think it was the RSI study, our CTO, Sjord, he loves this study. And I tell you, I've come to respect it quite a bit. Can you see how the Bollinger Bands on the RSI study started to contract like this and really squeezed in? That's a squeeze. So this said to me, and then all of a sudden, right, we see this W come in. So this said to me that, yeah, the volatility was coming out of the market and compressing, and something big was about to happen. So I don't know whether you can do it. And if you're in the level 1 program, just stick around to the level 2 program. Shartoshi is now actually sort of a instructor there in the level 2 program. I think he's still doing the level 1 TA work. He loves to write scripts on TradingView and MT5, and he actually does a lot of the sort of TradingView script talking with you guys in the level 2 in that particular module. He might help you be able to build a study like this. And really, I would say that this would be a really valuable study to somehow create, is can you have the system spit up RSI squeezes like this? So if you're asking, Brian, what was the sort of indicator that got you excited, it was the fact that the RSI was squeezing like this. It said something was about to happen. And kind of like how you see the squeeze in here, this is what I think is actually going to happen on the other side of that. You can see that led to a pretty substantial rally. You might even just simply say, well, that was that rally. So if we take the same numbers over here, that means that we probably are going to get a move very similar to that, there to there. So I wouldn't be surprised if we head back up to that $1,900. And also notice too, that is the original sort of market structure fail, right? What are we supposed to think if we ever see the market smiling at us? So there's probably a lot of people that if they wanted to be short gold, this is where they want to be short. So interesting how they'll take the market right up into that. It's above value. That would replicate this range. All of these markets will now get overbought again, and then they can roll it over. Now, what do you think the odds are that that is a reload short zone? I'd say probably pretty good. So, and this was sort of, remember, I had thought on election night, we were just going to see a spike straight up into here, but it looks like they're just literally stair-stepping the market back up into this reload zone. So hopefully that helps answer that question. Okay, it takes me about a half an hour to get out to Liam. I'm supposed to be there at 2. So that gives me about 10 minutes to get pretty for him. I'm uglier than stink, so I think we're just going to have to leave it at that. Have yourselves a fantastic rest of your day. PMA for the win. I sure hope I gave you some value for your time spent here. Wasn't too shilly. I will say that I think that TRI is a very unique, special place. I think that we're in very, very difficult market circumstances right now. So for heaven's sakes, go slowly. There's no hurry whatsoever in this market state. I do believe that crypto is very, very close to some sort of long-term pivot. Where's that chart that I was showing you guys earlier? Did I put all that stuff away? Oh no, I guess over here. Yeah, here it is. I think we're very, very close. But close only counts in horseshoes and hand grenades. Let's wait for signs of bullish divergence now, which we might get. And I think it would be a good idea to wait for confirmed divergence. Interesting how we do have, and actually this is a really good analogy, although I really don't want to spend any more time. I got to get out of here. Weekly divs have come in. So really it's just a question of, can I get weekly W's in price? We almost had a weekly W come in. If we could turn back up through here, we would have, but we just broke to new lows. So, on a weekly basis, we've got this huge technical objective. We also have levels on the volume profile, which lead me to believe there's a lot of buying interest down in this area. So I think we're probably going to pivot around here. Of course, remember cost of production. We're now finally coming down into value when it comes to Bitcoin. And really, I think, what we want to, and I've said this repeatedly to you, and actually, why don't we finish it off? Final trivia piece of trivia question. What is the one thing that we want to hear out of the sort of broader crypto conversation? Because of course you won't hear it at TRI. But from the public, what do we want to hear that will go, all right, we are just about at the bottom? One thing and one thing only. And it has everything to do with this. Oh, very good. Hey, you guys are getting good at this. Look at all those answers. Fucking A. All right, I've done my job. If that isn't a sales pitch for you to join TRI and get schooled up, all of those people I think are TRI people who answered that so quickly. Nicely done. Of course, the public, stupid as fuck. Don't be dumb football jocks. Don't be these people. These are the people. Don't be him. I mean, that guy. It's going to be interesting to see what the end story is. Notice, is anybody talking about Danny anymore? What the fuck happened to Magic Internet Money? I mean, that story's all evaporated. Don't be these people. Be smart. Stick around. Don't be this jerk. This guy's, I hate that guy. Anyway, but don't be the football players. I mean, maybe the football players get the hot chicks and they win tons of football trophies and all that kind of shit, but they're not good money managers. You want to be a good money manager? Come to TRI, learn how to play the game. I'll get you on the straight and narrow, and you'll start making money from this game instead of just puking it away. All right. On that note, buenas noches, buenas tardes, buenos dias, I guess, wherever you are in the world. PMA for the win. All the best. Hugs and kisses. Mwah, mwah, mwah. Wish me luck with Liam. I got to get out of here so he's nice and happy. All the best, and bye for now.